Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. I am Sagar Nandi, active trader. I use only one trading system, Q, that I developed myself. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. Let's start with the live system. Q charts instruments that often move the market. Dollar index. In the last several market recaps, I showed that there was a trend line resistance here and mentioned that dollar index will not be bullish unless that trend line resistance is broken. That is broken now. It has a bullish flow, a possible trend following long setup. So dollar is bullish as of today. If it continues to go up, that may put pressure on the market, though that inverse correlation does not always work. The other instrument that moves the market without failure is Megacap Index. In the last market recap, I showed the bearish indecision cluster and the top and mentioned that I was not ready to buy looking at that because price had already moved up and then it was showing the indecision cluster. That view is strengthened this week. We have a narrow size, small size inside bar, you could say, candle in the weekly, and in the daily from bullish color it has changed to neutral color. So I am not ready to buy at this point. If it comes down from here, I'll be happy to look to short. But it has not come down yet. It is neutral color. It is telling me not to buy. It is not telling me to short yet. Market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. In the last market recap, we were here and I was of the view that I was not going to buy anymore. It was extended. That view was useful because this week market did not move up. It has not moved down yet. Let's look at its weekly daily. Weekly has a narrow body, somewhat indecisive with upper and lower tails. In the daily, after the bearish indecision cluster, now it has displayed a bear release signal while coming down from the trendline resistance. If price comes down from here, that will be a signal to look for shorts. I will not look at the composites and the major indexes breadth. They will not give additional signal. All of them will say that it is not a time to buy, and if market comes down, it may be a time to short. Q charts market's external view. This is how most people around the globe see the market. See how much influence the mega caps have on the overall market. Most on QQQ and also on SPY. SPY has a candle shape in weekly that is very similar to the mega caps. In daily, this is also coming down from trendline resistance after displaying bearish indecision cluster. There is a trendline support nearby. If that support is broken, there will be even more reason to short even SPY. But if it starts to come down from here next week, Monday itself, or if it starts to go up and then reverses even better, then we may look to short individual fundamentally weak stocks in weak industries. QQQ very similar in daily and weekly. In daily, the trend line support is further away, so it will be easier to short QQQ constituents if it starts to come down from here, and it will be possible to short QQQ itself too. Dia weekly is similar indecisive. Daily does not have a trend line resistance, but it is coming down from both white and yellow direction lines with a bear release signal, and prior to that we had the bearish indecision cluster. Notice how the indecision cluster foretells what may happen in coming days. Indecision cluster is not a trade signal in itself, but we may get ready for the trade signal in terms of maybe a bear release signal, a trend line reversal, etc. If it continues to play out like the way it is doing for last 5-7 days, then I expect the next swing trade direction to be on the bearish side. IWM, here the weekly is stronger, still indecisive. Daily displayed that cluster of indecision and then a bear release does not allow buying. Now using Q-Edge bucket analysis, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in my trading and made it 100% real time, pinpoints reversal points with remarkable accuracy. Q-Edge also has sector industry stock breadth that shows where the market came from, where it is now, and where it may go next. Bucket analysis, 77% of stocks are above mid Bollinger Band, that is bullish, but not so many stocks are above upper Bollinger Band, so it is not overbought. Bullish but not overbought. And if I look at the sector industry stock breadth, now 1 month is bullish, 10-day also longer term period bullish, 5-day period is slightly bullish but mixed. I can see bullishness reduced from 1 month to 10-day to 5-day. Today it increased a bit, but on Friday it again turned down. This allows shorting if next week it becomes bearish again. Now one thing to note that in the icon version of QH, the country I used to choose is USA for the USA market, of course, United States of America, and that would use the S&P 1500 stocks in icon version, but this is the workspace version. Not many people have access to workspace yet. Icon is going to be discontinued from 30th June this year, and then people will switch over to workspace. Maybe a few days before that, Metastock will inform us about that. In any case, in the workspace version, if you use United States of America as the country, then it will use S&P 500 stocks. Why so? Because workspace has some limit on data access. That's why I did not want to use S&P 1500 for the country. But if you see that your limit is not being hit in your regular usage, our usage may be different from person to person. If you see your regular usage is not hitting the data limit, then you may use custom, and custom is going to use S&P 1500. So again, in workspace version, United States of America will use S&P 500, custom will use S&P 1500, and you may use custom if you see your data limit is not being hit by using that larger stock list. How to set custom? Let me explain that in next week's market recap. The thing to note is that I mentioned it in the last market recap that whether you use S&P 500 or S&P 1500, for all practical purposes, the insight will be same. And I wanted to explain that with some snapshots I captured this week as of Friday's close. This is bucket analysis and the sector performance here, bucket analysis here and here, and the sector industry stock advanced decline. This is using S&P 500. We don't need to nitpick on the exact percentage, but please keep in mind, hold in mind the insight that is coming, that it is overall bullish but not too bullish in terms of sector industry stock breadth, slightly bullish above 50% but not much more than that, and see the sectors. This is using S&P 500. If I change to S&P 1500, it is more or less the same. That's why I mentioned for all practical purposes, it doesn't matter in terms of these market level analytics whether we use S&P 1500 or 500. This was for the home page, and if I go to sector industry stock breadth, again this one is using S&P 500. Please hold in mind the relative pattern of the pie charts. I will now show you the S&P 1500 one. Same insight. That's why it doesn't matter for all practical purposes whether we use S&P 500 or 1500. If the data limit is not hit, then I prefer using S&P 1500 because it has a nice mix of mid, small and large cap stocks. That is one reason I can drill down to different kinds of stocks in QH itself. But if data limit is being hit, then there is no harm using S&P 500. Okay, let's continue. Technical breadth, we only profit buying stocks going up or shorting stocks coming down. That's why technical breadth is important. Remember, few weeks ago, I showed the weekly technical breadth had bullish headwind alert here that time. And I mentioned that it was likely to go up. It did go up. Last week was bullish, and now we can see it has become mixed overall. Some categories are bullish, some categories are bearish. Overall, it is mixed. So as if market went up after displaying a bullish headwind, and now it is pausing there. That is what we can visualize from this week after week study of technical breadth. How is Friday's breadth? It is bearish. Overall, most of the categories are also bearish, and also the bearish headwind here is saying that we may look for shorts that are at a high price level, lucrative shorts. Nothing so far has told us that go out and look for buying stocks. Market level summary then, the most important trading decision is whether and where to buy or short, or whether to stand aside. And here I'll make a distinction between market level summary. This is market level summary. Individual stocks may move differently from the market. Some sector industry might be weaker earlier while the market was rallying, and those sector industries may be starting to go up now. So it is important to know the market level summary and then see some industry is going along with it or against it. Trade accordingly, according to the industry's strength, aligning more and more forces in our trade's favor. So what is the market level summary? Market level, I am not willing to buy. Rather, if it tilts down, I am going to look to short. Review of last week's trade ideas. I shared only one stock, YMM. Bullish analysis based on here this day's candle, and I mentioned the market was looking overbought, so I was not very keen to buy, but I did find this stock and analyzed and showed it in the market recap. After that, it went up slightly but did not go up much. What did I do? I shared a tweet on my X page to explain what one could do. That was here. On 6th of May, that was Tuesday. So weekend I shared the trade setup here. I shared the trade setup here, and on Tuesday I explained that can a swing trader close a long if neither profit target nor stop is hit, and I went on to explain that yes, when one's market view changes, one may close the position. In the market recap, I shared this stock. However, the market view was changing to bearish. See, as of Tuesday, what happened? Monday, sector industry stock breadth turned bearish, and this is Tuesday market hours. In real time, I could see that Tuesday was also bearish. So I was ready for the market to lose bullish momentum. It was already overbought, and I saw Monday was weak internally in sector stock breadth, and Tuesday was also weak. So my market view was not in support of taking a bullish trade. So I closed the trade with very small profit. I did not want to hold on to a bullish trade when my market view changed from bullishness. Was that a good decision? The decision has to be assessed based on the logic, not based on the outcome. Whatever be the outcome as of now is different, but it happened, and if you follow a logical approach, outcome will more often than not be in your favor. It was the right decision to close the trade on Tuesday, because Wednesday, Thursday, Friday it came down. If you did not close it, though the market view changed, you would hold the trade with a small loss. Now it has not hit the stop level, but you would hold the trade with a loss. The weekly is also not looking bullish anymore with an upper tail, so I would not like to do that, and that is why I study the market every day. If the market view changes, I am reluctant to hold bullish trades. I can hold, no harm holding it through the stop. That is also a possible approach. But in this case, I did not want to hold and I shared it on Twitter before knowing how it would do, and incidentally, it did come down. This week's trade ideas. I tweeted that I will show how to look for a bullish trade when the market is not so bullish. As I showed so far, the market is not looking so bullish. So how do I still find a bullish trade? One is to use momentum, bullish momentum, minimum 3 bullish momentum. Let's find them. This is using Q Finder. We have all the liquid stocks with minimum 3, at least 3 bullish momentum. I am left with only 68 stocks. That shows Friday was not so bullish after all. I like to find trades that are coming out of a squeeze. So let's flag for the squeeze. Left with 27 stocks. Okay, I'm not sure. I had another stock in mind, not sure why it is not appearing. Let me check if I found the right stock or not, or I was looking at wrong data. The stock that I had in mind was BP. Let me see if I made a mistake. I was looking at outdated data or not. Connecting with workspace. Yes, it is bullish. This is the stock BP I wanted to share, and let me explain why I am looking at this stock. If the market is not looking so bullish overall, I may look for high dividend yield stocks, and BP has a very nice dividend yield, almost 8%. Of course, it is a profitable company, British Petroleum. It is undervalued, and though earnings growth is negative, it is going up, improving earnings growth. Stocks start to go up when earnings growth starts to improve. It does not necessarily have to be positive. It's a profitable company. Revenue growth is also going up. Among the industry peers, all the stocks went up. 100% stocks went up on Friday, which was not so bullish. How is its industry score? As I mentioned, some industries may not be following the market, and this is a perfect example of that. This industry, integrated oil and gas, was weak for a long time. Only now it is strengthening, shown by rapid acceleration and also high score. On weekday of Thursday, Friday, both of days, and you can see for several periods now it is going up, but I usually rely on the pace and the strength. Let's look at the stock, and before even looking at the chart, let's look at the Q Finder signals and setups. It has a breakout setup with fan out pattern from mid level, price middle level. Let's look at it now. BP. Weekly had a sharp drop, and only this week color and shape both turned bullish. Interestingly, right at the bottom, near the bottom, came the bullish headwind. At that time, it was at jump thrust low, price extreme low. All of a sudden came a big move up 3. You could start to look to buy from that time. This bullish headwind day would be a perfect day to buy, the most lucrative point to buy in my view, but I did not share it. I did not buy it at that time. Now it went up, created a triangle on a weekday, very beautifully opened up with a gap, closed with a bullish shape, bullish color candle with a breakout setup. And it has high dividend yield, that is also providing a safety net. If I could look at its momentum signals, okay, it does not have a squeeze because I filtered for squeeze. That's why it didn't come. It's not in a squeeze, but it has not only 3 but 5 momentum signals: Bongo, Mobo breakout, Kahuna, pocket pivot, viable gap up. That is how in a weak market you can find bullish trades that are low risk, and I also think again is lower risk if you are able to hold the stock in any case because of its dividend. Then you could play it with short put as well. If you carry out the 360 analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, these live examples I am very confident shows there is no reason not to do that. Trade profitably. Thank you.